Michael Sanzatera, one stock you like in the RidgeWorth Large Cap Growth Fund is Facebook. They beat Wall Street estimates by 5 cents in the third quarter. Also beat on the top line. Stock is surging, but how much further can it go?
You know, we think Facebook can continue to grow north of 30% for the next few years. They're taking market share from traditional places where advertising dollars go, print media, television, growing their user base. It can actually probably do pretty good for the next few years, actually, from a stock perspective.
All right. You're also a fan of Vulcan Materials. They're in the asphalt business. Stock's up over 45% so far this year, but it trades at 27 times next year's earnings. I mean, we're going to have a lot of bad winters because we're going to need all that asphalt to fix the roads. Are we going to get that kind of a winter?
Well, I'm not sure about the weather for the winter, but at Sylvan Capital Management and in the RidgeWorth Large Cap Growth Fund, we're looking for companies that can exceed investor expectations. And believe it or not, aggregate, granite, asphalt, that expectation set has gotten set pretty low. And Vulcan's doing a great job of not only getting increased volumes at high single digits, but pricing too. And there's not a lot of industrials companies that are actually getting volume and pricing increases. We think they can earn north of double what they're earning right now in the next couple of years. The stock will continue to outperform for the next 2 years, in our opinion.
And you also like Under Armour, like Vulcan, they're up over 40% so far this year, but they're spending a lot to do it. And do they have the money to compete with Nike?
They do. You know, they've chosen to go a different route for spend. They are spending some money with the name brand athletes, but really it's this digital media by buying applications and places where there are user bases and expanding their footwear internationally. We see a lot of growth opportunity for Under Armour to continue to really beat up on Nike, but even Adidas probably more so.
All right, and then finally, you're a fan of Amazon. They showed a nice third quarter profit. They can make a profit when they want to. But they're doing a whole lot of things ahead of this Christmas season. They're opening up a physical bricks and mortar store. A lot of things going on at Amazon. Tell me why you like this stock.
I like Amazon primarily for their retail business and their ability to add third-party partners, which is really a very low-cost partner for them, a more profitable partner for them when they sell stuff. But even more interestingly, now that we're getting a breakout from Amazon Web Services and we can see their cloud business line itemed in their P&L, I can see a much, much larger and, to your point, more profitable business down the road as cloud computing really gets a hold at the enterprise level.
All right. Well, thanks a lot, Michael.
Good to see you.
Thank you for watching The Street.